adjusting entries and adjusted trial balance. Now, adjusting entries, we said we have 4 types of adjusting entries, and each one I need to debit an expense or credit a revenue account. The first one, it's deferred expense, which means I paid in advance before the expense is incurred. So for the adjusting entry when the expense is incurred, I need to debit an expense and I need to decrease the asset account. For the deferred revenue, it means I received in advance, but it's not earned yet. So when it's earned, I need to decrease the liability account on the debit side, which is unearned revenue, and on the credit side, I need to credit a revenue account. For the accrued expense, it means the expense is incurred, but I did not pay yet, so I need to debit an expense account and I need to pay it later, so a liability account will increase in the credit side, which is payables. Last type for today is accrued revenue. It means the revenue is earned, but I did not receive my money yet, so it's gonna be receivable. So I need to debit an asset account, which is accounts receivable, and I need to credit a revenue account. And this is a summary for the deferrals or accruals. Deferrals, it means either it's deferred expense. Okay, and we said we have 3 types. If you go back to the videos for chapter 3 playlist, you're gonna see that for the deferred expense, you're gonna have 3 examples: prepaid rent, supplies, and depreciation. So for the prepaid expense, I paid in advance. So prepaid rent to cash. And for the adjusting entry, we said I need to debit an expense account and I need to decrease an asset account. For the depreciation, I bought furniture and I paid cash here. Okay, then at the end of the period, and the default date is December 31st, I need to record depreciation expense on the debit side. On the credit side, we have the accumulated depreciation, which is a contra asset account. This is a contra asset account. It's credit nature, and it decreases my assets. Okay, and the second type of adjusting entries is deferred revenue, which is unearned revenue. Okay, I received cash in advance, but the revenue is not earned yet. So I need to debit cash and credit a liability account, which is unearned revenue. At the end of the period, I need to decrease this liability account and I need to credit a revenue account. Now, accruals. We have accrued expense and accrued revenue. For the accrued expense, it means the expense is incurred, but I did not pay yet. So I need to debit an expense account and I need to increase my liabilities on the credit side. For the accrued revenue, the revenue is earned, so I need to credit the revenue, but I did not receive yet. So I need to increase an asset account on the debit side, which is receivables. So now, 2 rules for the adjusting entries. There is no cash. Deferrals means I paid or received cash in advance. Accruals means I'm gonna pay or I'm gonna receive later. So for each adjusting entry, either you're gonna credit revenue account or debit an expense account. Now, after we journalize the adjusting entries, I'm gonna post the adjusting entries. So I'm gonna see the effect of adjusting entries on some of the accounts and my unadjusted trial balance, and I need to adjust those accounts to prepare the adjusted trial balance. So at the end of the fiscal period, an adjusted trial balance is prepared. Again, it's adjusted after the adjusting entries has been recorded. A summary of all accounts with adjusted balances. The purpose is to ensure total debits equals total credits. So the adjusted trial balance includes the balances after posting the adjusting journal entries. Okay, so you're gonna prepare T accounts only for the accounts affected by the adjusting entries, and you're gonna find the new balance. And from the adjusted trial balance, we're gonna prepare the financial statements, which is income statement, equity statement, and balance sheet. Again, we're gonna prepare them based on the adjusted trial balance numbers, not the unadjusted. Thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.